Swing trading is one of those areas in the market that can seem simple from the outside. You buy something like a stock, hold it for a few days or weeks, and exit when the price moves in your favor. How to Swing Trade by Brian Pezim is a book that showed me how much structure can sit behind those decisions. It's not a flashy trading book, and it's definitely not content that promises a secret strategy of any sorts. What it does well is cut through noise, especially for beginners, as it mentions on the cover. The book explains tools, risk management, psychology, routines, all the things that can determine whether a trader survives longer than a few months. In this video, I'll give a short review of the book and then walk through its key lessons by grouping the chapters into major themes. It's not meant to replace the book by any means, but to give you a clear picture of what you'll learn and why these ideas matter. How to Swing Trade is practical, straightforward, and focused on fundamentals rather than hype. What I appreciated is how Pezim frames swing trading as a business, something you approach with rules, routines, and measured risk, not emotions or predictions. If you're a beginner to trading like me, this book is fairly accessible and well structured, and I would definitely recommend it. You may want to keep your search engine handy for certain terms or concepts if you're an absolute novice in finance, but you won't need to have a strong technical or financial background to understand most of the book. You'll get to see what it takes to be a disciplined trader, the basic routines and mindsets of a swing trader, trading rules, good entry and exit points, what trades to take or avoid, and how to manage risk and reward. One of the biggest things I took away is that you don't trade to necessarily win more frequently than you lose, because you will inevitably lose. What you want is to make sure that if you do win on a trade, you win big, and if you lose smaller. Many good traders will possibly have way more losers than winners, but the amount that the winners make can eclipse the amount that they lose by. Many of the trades that you make may not go well, and it's how you deal with those losses that matter. If you're more experienced, this book can serve as a good review of basic concepts, and perhaps a reminder that you might be overcomplicating certain things. However, there isn't as much depth into specific topics as you might like, since it is a general guide for beginners after all. If you're already trying to fine tune your charting setups and you're comfortable playing around with Bollinger Bands and RSIs or other indicators and patterns as such, then you may want to consider skipping or skimming this one. Now let's break down the major topics from the book. Instead of going chapter by chapter, I'll group them by the areas that matter for most of the swing traders. The first section of the book covers the basic mechanics of trading. Pezim explains things like the bid-ask spread, what it means to go short, and how margin accounts work. These concepts aren't there just to fill space. They matter because swing trading often involves holding positions overnight, using borrowed buying power, or navigating spread risk. He also covers the types of securities you can trade, which includes individual stocks, ETFs, currencies, and even options, although he noticeably glosses over the latter two. There are various trade-offs between each of these securities. ETFs are safer but move slower, whereas individual stocks move more and offer more opportunity but come with single stock risk. The message is simple. Understand what you're trading before you focus on how to trade it. The next section is about risk management. This strongest part of the book, and a part that many beginners skip, covers a few rules like protecting your capital at all costs, honoring your stop losses, not taking profits too early, and not risking more than around 2% of your capital on any trade. Pezim also reminds traders that losses are normal. Swing trading is a game of probability and not perfection. Pezim focuses on continuous review as well. Journaling your trades, noting your mood, and managing your stress levels are all internal factors that affect how well you stick to your plan. Next, Pezim acknowledges that most swing traders aren't accountants And so he gives a short list of fundamentals that are worth paying attention to. These include revenue trends, earnings per share, PE ratio, debt to equity, and return on equity. He also covers short interest, which can be both a warning sign and the source of explosive moves when short squeezes happen. If you're not familiar with these terms, you might want to search it up or perhaps consider reading the book. But the most interesting part here is his discussion of hot sector mania plays, and these are situations where sentiment actually overwhelms fundamentals. The situations can be highly profitable but require early entries and disciplined exits. The next few chapters focus on technical tools. The explanations are grounded and not overly complex. He skips over many of the mathy derivations and instead focuses on what the indicators or patterns mean. If you're the type to know why these occur, however, you'll want to be prepared to do some searching on your own. Pezim covers candlesticks and reversal patterns, support and resistance, moving averages, RSI, MACD, and ATR, as well as common chart patterns like double tops, flags, pendants, and head and shoulders. Though the explanations aren't comprehensive, I appreciated how he ties each concept to trader psychology. A double bottom shows sellers are exhausted, a bull flag shows a pause in an uptrend. These examples show that these tools and patterns are there not because of randomness, but because of trading behavior. There are also plenty of examples and charts to follow along, which definitely helped my understanding. Afterwards, Pezim lays out guiding principles for a trading system. Keep strategies simple, only trade high quality setups, ensure every trade has a favorable risk to reward ratio, know your routines and follow them, measure results, and adjust when conditions change. He also adds practical rules specific to swing trading. Avoid trading through earning events, avoid known catalysts, avoid overexposure, and avoid penny stocks. For beginners, these rules prevent disaster. For experienced traders, they're reminders about how risky it can be to forget these rules. The book closes with some actual strategies: scanning for setups, trading gaps, and participating in hot sector momentum plays. He also breaks down entries and exits, which includes not chasing after a certain price, using limit orders when possible, scaling out winners, and using trailing stops to protect gains. This section is practical, but what makes it useful is how it ties back to risk and routine. A strategy only works when it's executed with discipline. Pizim ends with what might be the most important part of swing trading: building a routine. Defining goals, choosing markets, reviewing trades, and constantly monitoring sentiment. These things aren't optional. They're what makes the entire process sustainable. Trading isn't about intensity, it's about consistency. How to swing trade isn't a book of secrets, and that's why it's valuable. It gives you the groundwork to build a stable trading process and filters out the noise that confuses so many beginners and even intermediate swing traders. If you're interested in swing trading, or even just understanding how traders think or act, this book is a solid place to start. It's given me a framework to start, but also left me with enough questions to search around and continue my journey elsewhere. If you've read it or have another trading book or concepts that changed how you trade, I'd love to hear your thoughts. Thank you all for watching, and until next time.